Well, welcome to this Payments Unpacked podcast. We're going to talk about a few things about payments today. If you've not met me before, my name is Mike Chambers from Payments Unpacked. If you have met me before, I probably need to apologize for the glasses situation, but let's smooth over that. But today I'm joined by Richard Ransom from Bottom Line. I guess a number of you will know Richard, but Richard, go for it. Who are you?
Yeah, so Richard Ransom, I head up solution consulting for corporates for Bottom Line globally. I'm also one of our industry leads and a payment SME.
Nice and succinct. Perfect. Perfect for today, Richard. We're going to cover four things. We're going to talk about a payment instrument turning 18, stalwart of payments types, over half a century old. We're going to talk about rails, not HS2, but payments rails. And given it's such a hot topic and so important to UK, we're going to talk about resilience. So there are four things for today. But Richard, we have to start with an 18th birthday for faster payments. So 27th of May, 2008, we saw the launch of faster payments here in the UK. Richard, give me some recollections and some observations about that journey that faster payments has gone through.
Yeah, it was a really interesting time. So I was working for Vocalink at that time, and it was just incredible the amount of energy behind it. Everything happened really quickly. So in reflection, comparing to what's happening with the new payments architecture, it all seemed to begin and end really, really fast. There was such an industry-wide desire to get this done. So everyone working together. This is why it was, achieved quickly. And I think there were some really bold decisions made. So not going for a next day service or just a same day service and going straight for real time. I think that was the smartest move. And it became very quickly.
Do you remember Ellie? Oh, early, late, early?
Yes.
Imagine
exactly.
if we'd have got Ellie. I just think we would be so much poorer for that.
But at the time, incredible. I think it's one of those, no one else has got one of these things. And the usage for consumer payments, at least from the off, was quite incredible as well, that ramp up of volume. So that was the real sort of take on, I think, that people were necessarily that people wanted to happen, didn't necessarily think might happen. But yeah, that's my recollection of it. Just seemed like a really big joint effort. There was a lot of work and it was accelerated, but it happened. And I know the live date was stalled a little bit, but in the grand scheme of things, this was sort of 6 months later than people had hoped, rather than 10 years later and nothing's happened. Sorry.
That's right. And here we are 18 years later, and it's working perfectly. I saw some stuff on LinkedIn this week from Mike Banyard. He would have been HSBC at the time, proudly displaying his faster payments merch for the launch of faster payments. So obviously, a lot of people involved right across the industry to make that work. I guess if I'm a little bit grumpy about it, I bid to run the faster payment scheme when I was chief executive of Bax and didn't get it then, got it later. So I was a little bit to the side of the launch of faster payments. So a little bit grumpy I didn't get it, but could see the transformation it was going to have. I was thinking, sorry, go.
Yeah, sorry, Mike. So as you're talking, I was thinking about one, because I've been singing its praises. So the one area where I think it was surprising that it wasn't as successful was definitely B2B payments. Yeah. So I think early on in the process, some of the justification and business case would have been around the fact they can move some Bax volume from direct credit into faster payments, and that would help to reduce cost. I think at the time, the per item cost was quite high, but the fact that for the normal retail customer service, there was broad, every bank was going to do it, every bank has to do it. As soon as we started talking about business to business and corporates, it became voluntary. And then only 2 banks took it up, which meant we didn't get the ubiquity and the costs were high. So even today, businesses are still transacting their accounts payable payments, their expenses, their payroll using the Bax 3-day service. So I think that replacement happened for consumer payments and P2P payments through e-banking, but the business payments haven't really gone away as much as expected. And direct credit's quite flat growth now, but it's still there. It's not, there's no massive drop off, but I think that was a big miss in my view. I think had they been made mandatory, we'd be in an entirely different situation now.
No, I think that's right. I mean, Bax Direct credits, it's plateaued out at 2 billion. So we've seen a little bit of migration, but not a lot. A strategy to move direct credit into faster payments would make so much sense today in 2026, just as much it would have been in 2008. So I think that, that's one of the things we could have seen, a more proactive strategy to move direct credit into faster payments. And although I was a little bit grumpy, it did allow me to move 300 million standing orders from Back's direct credit into faster payments and overnight get rid of the float. It was the last bastion of float on digital payments here in the UK. So we could remove float by giving those payments to faster payments. So yeah, there was some upside there. I just remember at the time people saying, well, what's going to happen? Who's going to use faster payments? What would you use it for? Well, standing orders, that was an obvious one. It got rid of float, and we saw some payments going through. Direct corporate access was a big missing point for B2Bs. But it transformed the way that, we share the cost of a pizza or a night out, or I bung you a fiver for your birthday, away from cash and check, from those analog payments through. But when we think about sort of other use cases of faster payments that we've seen explode over 18 years, I don't think we even thought about them at the time. We didn't realize how creative people would be within the confines of faster payments to make those payments. And look, 18 years on, 5 billion transactions a year, you have to take your hat off to faster payments.
Absolutely. And I think if you look at open banking's less spectacular growth, you wonder what hasn't quite gone right there. So faster payments was an unknown and it was a punt. But
hold that thought, because we're going to come back to that in a minute in terms of VRPs. So I said I was grumpy that I didn't get faster payments scheme ownership at day one. I did get it later. I was the first chief executive of Chaps, and I took faster payments out of Chaps and created Faster Payment Scheme Limited. That was sort of a behind the scenes legal thing we did. That was fine. So we established a board and all that stuff. But I think my biggest contribution, I think to faster payments was looking at reach. Remember at day one, you couldn't reach every sort code. So, I can pay Richard on faster payments, but I can't pay Mike on faster payments. Sort of didn't make sense. So I managed to get to sort of near 100% reach on faster payments destination. That was good. And the second is, remember on day one, this bank could do £10 on that channel, £100 on that channel. We're now £1 million for a faster payments limit, but most banks will offer a lot less than that, in the tens of thousands. But actually getting some form of uniform, can't even say the word, you know what I mean, uniform level of being able to send the payment would be part of my contribution to faster payments. But hey, 18 years, where's it going to go next, Richard?
Well, you tell me. We've been trying for 10 years to do something else with it. I think you absolutely have to have a real-time payment service now. But, low cost account to account, that is definitely the direction of travel. Or at least that's the way that the industry wants to go. I think what you have today works 24/7. I could make a payment to you now and you'd see the balance in your e-banking app probably quicker than I would see the money disappearing from mine. It's that good, but it's limited because of its links to Link. So to the framework it was built on, which is sensible, ISO 20, the ISO file format at the time for cars 8583, it made sense. But now, we are in an ISO 20022 world where lots more information could travel with the payment. There's lots more could be done around fraud and control, moving from a format which is based around card and whatever card needs to something that is more suited to what an organization, business might need out of payments. That's kind of, these are the things that start to become apparent. So yes, it is real time. Yes, minimum downtime, but there's more that could be done. Would you do more
about the branding of faster payments? My window cleaner puts a bit of paper through the door and it says, "Pay me by backs." It's great because, I quite like people saying pay by backs, but in reality, you can't pay by backs as a consumer. It will go through faster payments.
Yeah,
I think branding's an issue, consumer understanding.
I don't think it's an issue because I don't think consumers necessarily need to know what faster payments is. So I just know that if today, like 20 years ago, if I tried to make you a payment through your banking, it would have been complicated and clunky. Today, I could pay a plumber in 2 seconds. They don't care that it's a faster payment. So, they don't care what the payment's called. They just care that it works and the money's instantly there. It's the same, buying a car, whatever. But these things are so much easier today just because of that. And then the brand matters as much.
Yeah, with faster payments, I'm with you. I'm not necessarily with you on VRPs, but we'll come to that in a moment. But from a faster payment push, give my bank a payment, tell them to get on with it. And the biggest conundrum I think faster payments has is this hidden factor, and to an extent it doesn't matter, but it's a 2-hour promise, a 2-hour SLA with a 2-second reality. There's this big underselling of what faster payments can really do. If I think about I'm making a payment from one of my banks to the other bank, the recipient bank gives me a little notification on my phone saying your account's been updated with £100 or whatever I've sent before my sending bank has
Yeah,
updated my balance. I mean, that's amazing, isn't it? It's like a
that's
miracle.
incredible.
So very good. And as the bank think about settlement in RT2 and there's a consultation paper, as you know, out from the bank at the moment, thinking about clearing cycles for RTGS chaps. As they make changes, they can think about how that might improve settlement within faster payments. Do you think the deferred net settlement, the cycles of settlement, is an issue for the banks and your customers? I know for you, the average person on the street, it really doesn't matter. But how big an issue is the settlement cycles in a DNS, deferred net settlement?
I think outside of the main banks, so when we get to the banks, the bottom line services customers, so when we're helping to connect via our aggregator model, this is where it starts to become more troublesome. And some of the problems with smaller banks being able to compete are the fact they haven't been able to get accounts at the Bank of England, and it's been a big queue, and it's a difficult process. And then even then, it doesn't necessarily work the way that they want it to. And I think in some ways, the requirements of faster payments don't help smaller banks who do only operate 5 days a week, and they only operate in business hours. They don't need to operate 24/7 because there's no expectation from them that that's when customers are going to make or receive payments. And these parts of it do complicate matters, but I think anything that makes life easier from a settlement point of view for a smaller institution and the larger institutions that service them is really helpful.
Yeah, because in most countries that have leapfrogged the UK in terms of coming to the faster payments party later have got what they call instant payments, and they are
Yeah.
genuinely instant payments. We've got near real time or near instant payments. You and I don't care. That's back to the 2-hour SLA with the 2-second reality. But I think that as the banks start to look at settlement and settlement over RTGS and the use of chaps, I think there is an opportunity, isn't there, to change the way that these faster payments accounts are funded and defunded. It might help in settlement risk. It will certainly help in liquidity costs. But for those tier one customers that your firm supports, now that's going to be a really important thing for them.
Yeah, absolutely.
Okay, well, if I had a piece of cake, I'd share it with you. If I had a candle, we could sing happy birthday to it. But 18 years old, faster payments, congratulations. I think with the journey we're seeing with new payments architecture into new real-time payment infrastructure, you're probably going to make your 20s faster payments. So it's here for a whole chunk of time.
Yes.
Let's turn to the stalwart of payments, of digital payments, direct debit. Over 50 years old, billions of transactions going through, still growing, small percentages, but still growing annually year on year, integral to the way that UK population pay for the goods and services they consume. I think it's still at the peak of its usefulness, with some other things we might mention in a moment. But what's your analysis on this payment stalwart, half a century and not out?
It obviously still works because the market hasn't organically found something else to replace it. So we know that continuous credit card authority has become a more mainstream way of collecting. And there was a while where that was just seen as a dangerous and difficult way of collecting money. But large organizations around subscription economy and digital subscription economy, Netflix, Amazon, Microsoft, all these organizations went straight to a card model. But that hasn't dimmed direct debit. And, as you've said, it's continued to grow. These are small percentages, but it's not insignificant amounts of transactions. And we can watch the data in bottom line of the number of new direct debit instructions that are set up. And those numbers continue to grow. We're not seeing a decline in that. And these are large numbers year on year. So I think it just works, doesn't it? It just works. People are happy with it, because if they weren't, I think the market, after all of this time, may have already sort of developed an alternative.
I think you're right. It just works. I don't want to pay anyone any money, but unfortunately I have to pay money for my council tax and car insurance and all those sort of things. So if I'm going to do it and direct debit works in the background and it's known and trusted, it's not a surprise it works well. But that said, nothing's perfect in life, and direct debit certainly isn't perfect. What would you do with direct debit to bring it into the 2026?
I think the one thing that billers always tell us about is the first payment to account. If only If only that first payment to account could just be more rapid. So today, because of advance notice and the excellent set of rules which have developed over time, there are consumer protections in place, but perhaps the economies and people's risk appetites have changed, and that huge advance notice before the first collection does get in the way of direct debit, which is why often organizations are using credit card as the first collection or open banking as well. So we start to see that at the front because it's trying to fix a problem of, I'm selling a service. I want to take your money straight away and then carry on the subscription, first payment to account. I think in terms of failures, that's really low compared to other payment methods. So I think when things do fail, the problem is it takes a while before you find out why they failed. So you might get money returned to your account, but it's going to take days, and then you will find out through the excellent reporting that's available through Direct Debit. That's another strength of the service. It's the so-called A reports. Fantastic way of reconciling and managing collections, but it just takes too long for some people to get told that something hasn't happened. If you fix that first payment to account and finding out something has failed, I think Direct Debit is still absolutely completely enough.
Yeah, I think they're two good points. And that first point about first payment, if I'm stuck in an O2 store, want to walk away with a bit of hardware, then they needed a way of getting some money. They always would default to a card and then direct debit afterwards. And that sort of made sense. Now, we can move that credit card, debit card payment to an account-to-account payment. That sort of helps in open banking. As soon as you move it to a VRP, a variable reoccurring payment, that then takes direct debit for second and subsequent collections out of the picture. So we'll cover VRP in the moment, but I think your two ideas are spot on. And I've got a bit of a thing about direct debit. Well, I ran the thing for over a decade, so not a surprise. But I would love to do something with the processing cycle. It's not a clearing cycle. Direct debit is instantaneous debit and credit on the day of value.
Yes.
And we sometimes forget that. There's no flow and there's, it's instantaneous. But there is a processing cycle and a submission cycle. As well as I know, it's only a 3-day cycle. Well, firstly, it's 22:30 on day one and it's 0200 on day three. So it's not even a 3-day cycle. It's, 36 hours or whatever it is. But it's only that because we used to put tapes on the back of courier motorbikes and the back of transit vans and shut them up the M1. To Dunstable or even Bread Street in London on a courier to get them into there. The only reason we got this clearing cycle is because of physical media, and we haven't had physical media for some time. So I would like to do something with that processing cycle. The closer you can get the submission window to the day of value would huge amount of benefits in terms of adjustments and new direct debits.
Absolutely.
I've just transferred my account using current account switching service. So another service I ran for a few years from one bank to another bank. That worked perfectly, I'm pleased to say. A bit of a shame that I launched CAS all that time ago and I never actually used it. But I've now used it and it was perfect and it worked brilliant. But it did leave me with one account at my original bank, Barclays, where I used to work. And I wanted to move one direct debit from there to my new account that I'd used on the CAS service. And Barclay card was a direct debit. I tried to lodge the direct debit and they said your first collection will go from your old account, not your new account, because we haven't got enough time to process it. Barclay card had 28 days to the next collection and they thought that wasn't enough time. So that collection is the first few days of June. I don't know which account it's going to go from. We'll wait and see. But processing cycle of something I would do. I think I'd look at the direct debit guarantee. There's only one country in the world that has a direct debit guarantee that's unlimited in time and amount. No surprises. It's the United Kingdom. The European model, is it 13 months? Is it a certain amount of money? There's got to be a lot of sense in that. I did try and change it when I was running backs. The environment didn't allow that to happen, but I do think that, reducing the amount of time when you can claim on a direct debit will reduce, to a reasonable amount of time, which really wouldn't affect the average consumer, but would be much better for corporates and for banks.
Yeah, absolutely. And I think that's the one thing that stops many corporates from looking at direct debit as a way to collect business to business.
Yeah.
Although it makes complete sense, the unlimited guarantee, although the indemnity claim process is much stronger than it used to be. And it's locked down to the point where you can't just say, hey, I'll just have all that money back and you're never going to see it again. The worst you may get, if it's not a legitimate claim that you can prove, is you'll get a hit on cash flow. But
It is strange. My personal account, I pay everything by direct debit. Absolutely fantastic. I haven't got to worry about it. On our business account, I don't know if I want to pay that, that subscription by direct debit. I'm not sure about. It's ridiculous, but I should be in that small business environment. I should
Oh,
be,
yeah.
and certainly right across businesses, we should be. I think the third thing I would seek to change, if you look at direct debit, it really established itself in the UK because of its trust mark, its guarantee, its branding, its logo. The logo is subject to trademark, but the words direct and debit are not subject to trademark. So anyone can use the words direct debit, but you can't use that overall trademark. But it's often presented or perceived to be a very rigid service. But it has. I can only take payments I can only offer you direct debit on the first of the month. If there was a way to exploit the flexibility of direct debit, multiple collections, weekly collections, whatever it is, I do think that, or consumers being able to select dates, giving more flexibility, some of those things perhaps about the variable reoccurring payments are going to offer.
Yeah.
I think exploiting that flexibility might be good. What do you think?
Yeah, it's really interesting. Is it, we've started to see variable recurring payments in our world, in the LinkedIn world of payments, and we were starting to promote them as a service. And what you hear a lot is, direct debit's inflexible, there's problems with failures, and a lot of us are going that they're just not the case. You can take a direct debit on any day as long as someone agrees for that money to go out of their account. You do need to give them advance notice, but that doesn't have to be forever. It doesn't have to be a month in advance. And it can be flexible. The amounts can be flexible. The dates can be flexible as well. So you can allow your customers as a biller to change the date of their collection as long as it's within sort of a range. And this is where the 3-day cycle sort of gets a little bit in the way of it. But there's no reason why you can't offer flexibility. And I think what I saw 25 or so years ago is organizations starting to go from it's one collection day a month to you can choose any collection day because it became a competitive thing. So if one utility said, right, we'll collect on any day you want. And I looked at my cash flow and thought, yes, I think the 27th of the month isn't a good day for my direct debit. So I'm going to move to someone who can offer me the 24th. So the flexibility is there. I think that it's a shame that understanding isn't there and that maybe billers haven't adapted to that flexibility because they felt it's a really tight, rigid process that we can't play with. It's very solid and reliable because of that.
It's difficult to argue that it's hindered the growth of direct debit because the numbers were amazing.
Exactly.
But in reality, I think it has. I do think a bit more flexibility, using the flexibility that it currently exists, let alone new flexibility, and getting away from this perception of being a rigid payment system will really help. I'm not going to do it today, Richard, but I normally would bang on about what I call direct debit 3.0.
Yes.
You imagine if you put direct debit, variable recurring payments and request to pay in one box. What an amazing collection product or pool payment product you'd have. But probably a subject I would want to bang on
without
about.
a doubt.
What do you think?
Yeah, I absolutely think that what will happen is the market will start to move that way. I have a feeling that we will get there. I think that direct debit is so endemic and it's so accepted. Trying to get people to move completely away from that seems very difficult. VRP has the advantages of an immediate payment to account, an immediate verification, so you can get around some of the issues with setup. And that's one thing worth mentioning as well, isn't it? Around there's still paper in direct debit, which, as I believe, will go away at some point. But we also have to remember that although a complete digital experience for signing up to a direct debit would work for me and it'll work for my kids and everything else, there are sectors of society, and I'm not going to say it's old people because it's across society. I think it's fair to say who would rather not have a third party accessing their bank account to say, yes, you've got a bank account, these are your details, to kick off the process. So don't feel comfortable with that level of access that's being driven by a biller. So biller's saying, I'm going to go into your bank account, see how much money you've got, potentially do a bit more in terms of affordability, and then start collecting a regular payment. I mean, for some people, they're fine with, I'm going to fill in a form on screen, click yes, have the guarantee in front of me, and that be it. And not have an invasive, I've got to set up an app, I've got to blah, blah, blah in place.
Yeah, I think that inclusion thing is really, really important. And in a digital environment with, people like us who have adopted those things, it is easy to forget. I don't think we can look at financial inclusion just on a single line. Just what does financial
exactly.
inclusion mean for direct debit? You've got to look at it holistically. Faith Reynolds has just done from Devonshire, what they call Devonshire Field Consulting, an amazing piece of work. I'll put the link in the comments below around financial inclusion and bridging the gap and how people are helping people adopt technology. But there's a wider call, and I think we'll see that from Faith in the coming months, for a more joined up or a more holistic approach to inclusion. Actually, she talks about
Yeah.
financial inclusion, but she talks about other aspects. How can you talk to government without doing it digitally? So, I think she's looking at that.
Yeah, that choice is so important, isn't it? And for the billers, they just want to be able to have that choice. So, we have, I've spoken recently to organisations who they would like to offer direct debit for everyone, but some of their customers will share a property, for example, and share a bill. And direct debit doesn't let you do that today. And even both open banking, it's difficult to do that. But someone's going to have to create something in the market
Yeah.
to help those sort
You've
of
got to be
processes.
quite clever, haven't you? You go to
Yeah.
sort of, I won't name them, but a bank that's fairly new. You have a sole account, you create a joint account, and you take your amounts from your direct debits from that joint account. And if you ever stop that, you fall out with them, you move house, it just reverts 50-50 back.
Yeah.
So the balance is back to the individual sole accounts. The problem is the direct debits fall off the table because that account doesn't exist anymore. Because otherwise, Richard, you're having all the direct debits when we split up, and you get
Yes.
half the money, but you can have all the direct debits on your account.
Yes, exactly.
No, you're right. We do need a better solution there. Face works amazing. If folk listening to this, there'll be a comment in the box below. Do look out at Faith Reynolds' report on this and watch what she's doing, because it's really important to work on that inclusion debate. Richard, we've sort of talked about the stalwart of direct debit for over half a decade. We've teased people with variable recurring payments. They're very much the new kid on the block. Where's it going? What's your view? What's happening with VRPs?
Well, I'm a bit nervous because nothing seems to be happening with VRP at the moment. So there was a lot of interest, a lot of noise. We've had a new organisation set up and a new model of trying to get a scheme going, getting new payment type out of there. We are now very close to being 2 quarters away from when the first VRP was meant to happen. So we meant to see Q1 this year. We are well into
just
Q2.
For people listening, Richard's talking about the past tense. We're not 2 quarters away from the event or to the event. We're 2 quarters away from the event of when it should happen.
Yeah. So we're now, coming towards the end of Q2 without there are variable recurring payment analogs out there, but this is the proper one as per the new company that's been set up. We're not seeing it. So I don't know where it is. And I'm not seeing massive demand from billers for it. So we are seeing the odd mention of it in a nice to have in an RFP, but no one's coming to us and saying how we're going to do VRP. No one's coming to us saying we're going to pull out direct debit and put VRP in instead. We're going to do a wholesale change. And I think this is where VRP may, this is one of the interesting things. I wonder if the organisations who are focusing on VRP alone imagine that it's going to be easy to migrate people away from direct debit, and their total addressable market is everyone doing the direct debit is 6 billion transactions. It feels really good, and I've talked to you about this before. What we are not seeing is the biller getting excited. So as a consumer, I could be getting excited about the fact that VRP is coming along. But unless the biller wants to offer that as a message, and they're never going to be told to do it, it'll never be mandatory. If the biller doesn't see a business case, it's possibly not going to happen. We might see some pilots, but I'm nervous of this delay, that it feels like getting some sort of momentum is proving difficult.
I think you're right to be nervous. I share that. There is a question about whether variable recurring payments are a standalone thing, or whether they will replace direct debits, or whether they would coexist like Direct Debit 3.0. I think, clearly I've already said that Direct Debit 3.0 would be my preferred option, but I think that if you think about VRPs on standalone basis, there's an issue that it might turn out to be what I call a gadget barn. And I'll put the link to a blog in the notes below about Gadget Barn. And Gadget Barn is about transport, and it's really about railways and stuff. But let's think about that, where the new kid on the block, the new thing, is too clever for its own good, and therefore it doesn't supplement the existing infrastructure. So if we think about the payment railway tracks that were put down, are they iron, are they steel, whatever they are, across the United Kingdom, we did that, and we chucked steam train, horses first with wagon ways, and then we did put a steam train down it, then we put a diesel train down it, and then we put an electric train down it. Those rails have met that purpose since Victorian times and probably just before. If you think about hovercraft, monorails, other maglev and Elon Musk building his tunnels in West Coast America, none of those have taken off in transport really in a wholesale way because they are not better than the existing. So this whole concept of a gadget barn. So from my point of view, for VRPs to take off, they'll either do it in the context of a Direct Debit 3.0, or they do it in, which has a large target accessible market, as you say, or they do it in where Direct Debit doesn't work, round peg, square hole, but that target addressable market is going to be substantially smaller, or they do it with wholesale substitution from Direct Debit. And I don't see the appetite from UK PLC. In terms of companies and government, I don't see the appetite from people on the street to do that as well. So you're right, we're 2 months out from the event and we still haven't seen it. Even that was a delayed date. Will we see VRPs in 2026? I don't know. Remember, though, that just because somebody has set a company up and just because there's some rules and some standards, they are not a monopoly. We might see VRPs come from another place. Visa have done some stuff, announced some stuff. Other people, I'm sure, are doing some stuff as well. So we might see VRPs come to market in the UK out with the organisation that's been set up. They're not a monopoly. There might be multiple solutions, which sounds inefficient, but there might be another solution that comes to market. I don't know. I think there are 4 things. I'd love to be involved in VRPs, but I'm not. If I was, I think I'd come up with 4 suggestions. The first would be learn from Direct Debit. Direct Debit would never have taken off in the 90s without the guarantee, the processing cycle, the certainty, the logo, the trust that was generated. So what can we learn from Direct Debit in terms of VRPs? Brand and trust mark. VRPs need some form of halo brand or trust mark. We need to educate both end users, you and me, about why you might choose that over than a Direct Debit, but also educate corporates and fintechs and financial institutions about really understanding what Direct Debit is, VRPs is. And then finally, this is the one that we probably shouldn't talk about because I don't want to stray into dodgy territory, but we need to look at the cost. If something is more expensive than Direct Debit, but cheaper than cards, we're not going to see a natural flow from a cost driver from Direct Debits to VRPs. We might see it from cards to VRPs. I think it's probably better we don't talk about cost and price and tariff on this call, but I think looking at cost is an important thing to do.
Yeah, and we also have to remember the banks that are being asked to implement VRP for billers to use also make a lot of money out of cards as well in some cases. So the substitution isn't something they're looking forward to. I don't think.
So if you look at all these angles, it's not a natural substitution, is it? Consumers love it. It's growing. There's a cost dynamic. There's an understanding dynamic. Yeah, let's probably leave it there. But it's not a natural substitution, is it?
No, and I think if you look back to those things you were talking about, the solidity, one reason why it is continue to be a de facto choice for businesses, especially for B2C, is the scheme rules. The scheme rules have evolved to such a point. They're so good. There are very few questions that can't be answered in terms of how Direct Debit processing works without just looking at that, just looking at the scheme rules. It's so well defined. And that, helps to create that trust and why organizations will still invest in it. I think the trust mark thing is so key. And I know there's a feeling in the market that the market should make its own choices, but now we've got 4 or 5 different names for VRP, continuous pay by bank, recurring pay by bank, and it's bank on file. All of these things are valid brand names for it. There's not the same as Direct Debit, which is one big name for it. Yeah. And, I think that's true, I probably don't notice a Direct Debit logo today because it's so ubiquitous and part of my life. It's just subconsciously, I'm just absorbing that every time I fill in a form. So I think that is such an important piece.
Yeah, and I think learning from Direct Debit, some of those things are really important. Current account switching, learn from Direct Debit. You can't walk, when you can find a bank branch on a high street, you can't walk past without seeing the current account switching logo. You can't look at their social or their website without seeing the CAS logo. We built trust and assurance and confidence in that current account switching service overnight because of the approach we took around logos and direct and trademarks and stuff and assurance. I think VRPs could learn a lot from that. Look, we're going through time. I mean,
Yes.
we'll split this up and do some chunks, but let's just turn to payment rails. So I've mentioned, is VRP a gadget barn? Is it too good, too clever for its own good? Whatever we have, I use the analogy of railways and steam, diesel, and electric trains. Whatever we need some form of rails, some form of infrastructure, some way to transfer the instruction to enable value to transfer from one person to another. In Bax, when I was running it, in Faster Payments, when that was being run, we had underlying contracts. We had a solution to renew those contracts and bring them together from an efficiency point of view and a cost point of view. That was stopped by the formation of Pay.UK. We went into new payment architecture. That failed. We now have, as an industry, are putting all our eggs into one basket again, called, I'll use my phrase, new retail payment infrastructure. As we think about the future of those payment rails, let's just call it new retail payments infrastructure for the moment. What's your observations or your thoughts and challenges that this process of a phoenix rising from the NPA bonfire?
I think the dynamics around whatever will replace NPA are wild. There are obviously so many competing forces that this is why we're not getting to a central idea and an agreement on it. So even the banks and financial institutions aren't agreeing on exactly what this thing should be. The regulators and the government and the bank are putting their two penneth in, and these things aren't naturally coming towards a cohesive central view of what we should be getting out of it. So it's really interesting, isn't it, that we're getting in this situation where what I think people want to see is now, this is it. This is the scheme. This is this is how it works. These are the timings. These are the interfaces. This is the file format. Let's go. But we can't even get there. There's no agreement on that. And the world is moving on. So since Faster Payments was invented, open banking came along. So that's actually since the new payments architecture was first envisaged, we got open banking. And that's changed some of the requirements of the service. It's that tension and the difficulties and the lack of any single view, which I just find really interesting. But there's no doubt that the technology in the background is old. So you can refresh the back end only so much. I've talked about the file formats, which don't allow substitution between the different payment types. So the fact that Bax is standard 18 and Faster Payments is 8583 and CHAPS is ISO 2822, these things don't help. The fact that the technology is entirely different. But then you've got to say, right, what can we do that's going to replace the Bax rails and the Faster Payments rails? Well, just let's make everything real time. But real time doesn't necessarily help when you have batch processing, and that's what you need for Bax. So can my real time payment service, which is used to dealing with transactions per second, take a 1 million record file of tax payments and process that efficiently without hurting bandwidth, without hurting the processing up? There's so much in it. And I think if we just look at direct debit and faster payments, direct credit and faster payments, yes, you can get somewhere, but then we're going to throw direct debit into the mix, which isn't it's a pull payment, not a push payment. And
some of those challenges are absolutely real, aren't they? And I think there is the danger, isn't there, Richard, that we're going to throw the baby out with the bathwater. That we're going to say everything looking back is rubbish. We're only going to look forward, and we throw that baby out with the bathwater. It will be one comment to make. You pick up on standards and everyone laugh. Oh, back standard 18 is 50 years old, 60 years old. Ha, ha, ha. You talked about 85, 83. When was that? Was that the 80s or the 90s or 2000? Whenever. I did a sum the other day, and I won't remember the exact details, but if you look at the first time that ISO 20022 was mentioned on the internet, through to now, through to its adoption by new retail payment infrastructure in the UK and its development and its live running and its eventual decommission and move to whatever comes later, ISO 20022 with a lifespan of about 60 to 80 years. So standards, we talk about ISO 20022 being the new kid on the block from a standards point of view. It's already old, and here we are thinking about it. And I think that's why it's driving some people to think about DLT and different ways of using blockchain and doing different things with different formats, but a bit of a challenge. I think you've pulled out some really interesting things in challenges and opportunities. I know you and I have spoke in the past that, there's a whole plethora of people who'd love to be part of the debate and the discussion. And then we saw the Bank of England stakeholder group names come out. Have you got any miracles here or any sort of secret sauce about getting good engagement? And who's missing from the engagement presently?
I think that corporates are massively missing from any of this engagement around what comes next. I think retail customers are very well served. SME customers are very well served. Anything that's around the retail part of a bank, and SMEs tend to fit in that, massively well served. Users of card schemes, very well served. Corporates who put through huge volumes and actually pay for the use of the payment services. Now, as a consumer, I don't pay to make a back payment or a faster payment to you, not a penny. But as a corporate, I'll be paying 30, 50p a night. Well, I'm paying for this stuff and will be paying for it in the future, but no one is letting me have a say on it. So one or two corporates on a few bodies doesn't mean it. And from a personal point of view, it feels very much like the card world. And we're using the languages of the cards, and that's where everyone's thoughts are. How do we make this better than cards, or how do you make account? How do we disintermediate cards? Which is why we start to talk about corporates and organisations and billers as merchants. And that's really poor, because when you speak to a charity or a council or an oil company or an investment bank, they don't think that they're merchants. That's not what they see them as. So I think there's a danger there that this area of the world just gets forgotten. So the banks that are using payment services rather than being participants of it get largely forgotten, even though they're the ones putting through huge volumes of direct debit, and our insurance and everything else relies on those organisations.
It's funny, you mentioned we don't pay for these services. A lot of these issues goes back to the Midland Bank in the 90s and free and credit banking. I think the dynamics have changed the way that banking happens and charges are thought about, or costs are thought about. I'll put a link in the comments below in terms of a lovely archive advert from Richard Bryars. I guess he's probably not around anymore, but Richard Bryars, an ancient BBC person, talking about Midland Bank introducing free and credit banking. But I think the issue for me, and disabuse me of this view if you want, Richard, but because you're right about the stakeholder engagement in the groups. I mean, getting it right is difficult because everyone wants to be at the table. Again, there's a link if you're intrigued about who's at the table of these points, that it's been announced, it's public. I'll put it in the comments below. You can see the names, and from that you'll see why Richard has said what he said. But disabuse me of this if you can, Richard. I'm worried about new retail payment infrastructure being the pursuit of something that is different to today, i.e. baby and bathwater. So the pursuit of something that is so far technologically forward that we won't get it for a long time. And the discussions are mixing payment instruments with new forms of money. And if we're thinking about a massive leap to something very different, and we're mixing an instrument with a form of money, then actually the ingredients in the bowl are like oil and water. They're not necessarily sitting together very well.
Yeah,
I might be overcomplicating it, but you
no, not at all.
me.
We're getting into the tensions again, aren't we? Because now we have regulation that's supporting the use of new types of currency, like stablecoin and the Great British Pound, or whatever we're going to call them. These things are being rolled into the mix, and we have to be ready for those. But yes, we do. But that's more tension. These things have to be controlled. We can't just say, right now it's all about stablecoin and how we accept digital currency for interoperability. But we still have to do business payments, corporate payments, some sort of direct debit. And it looks like VRP doesn't quite do that. I think it's more and more complicated, isn't it? You've seen the digital money conversation. I'm really interested in the digital money conversation, but kind of throw it all through one rail as well. That sounds really interesting, doesn't it?
Who knows? And my worry is we got so diverse things in the mixing bowl that they're going to be difficult to mix together and get a good cake. But we'll see. I meant to say on VRPs, you said about digital pound as well. I've got loads of URLs around VRPs and digital pounds. So if anyone wants to buy a URL from me for those topics, give me a shout. Look, let's run on to the last subject. And I don't think we can give this justice today, Richard. So I'm just going to cover it just a little bit, because we've talked about change of faster payments. We've talked about change of direct debit to VRPs. We've talked about change of infrastructure. How can we ensure that all this change that is going on in the payment space doesn't upset the resilience apple cart?
I think we need to nail the resilience on the current things we have first, because that's going to help to inform what we do in the future. So I think you mentioned Mike Banner. He described making any changes in faster payments like changing the jets on a plane as it's flying across the Atlantic. And we run the risk of doing that, just adding so much risk into the process. And I think we have to make our current systems as resilient as they can be today before we introduce something else. And it's not just about eventually we'll do parallel run of two different services, but I think also one of the advantages of what we have today is there are two completely different types of rail working. And if you could put all of your faster payments onto BACS and all of your BACS onto faster payments, then, if one of those networks goes down, brilliant. You have a much easier way to have that resilience. People are worrying about cyber. So banks were massively impacted last year with ransomware and other types of attacks. So how do you protect yourself for those as well? How does that work? So I just think we need to nail resilience of the networks today. And
so that's about the networks and the infrastructure.
Yeah.
I mean, you talked about Mike Banyard and was it jets on an aircraft around the Atlantic? When I did new BACS, whenever that was, we implemented new BACS over a weekend. I was told by the provider of the system, it was like rewiring the house with the lights on. Whichever one analogy you use, it is massive. So payment choice is really important, that we get that benefit of rerouting at the moment. Faster payments up to chaps down to faster payments, direct credit into faster payments. Obviously, direct credit doesn't give us that at the moment, but let's cover that another day. I think you've talked about resilience of the payment infrastructure. Now, as the overseer, the Bank of England with the financial markets, FMID, whatever that stands for, can't remember, they will be all over the payment system operators, all over the infrastructure provider. You work for a firm that serves banks and corporates. Resilience is a big topic. You talk about looking at that now as well as in the future, focusing on the system we've got it today. It's all over the media in terms of risk the UK face in terms of UK infrastructure. You've talked about banks and infrastructure and systems. What about corporates, the corporates you serve? How can you help them look at the topic of resilience? How can you nudge them to get it to the top of their agenda?
So we've been talking about something that happened for financial institutions. It was a piece of legislation the Bank of England put out called SS 121. I wouldn't suggest anyone reads it, but it's quite dry. But that introduced some really interesting concepts about how you should look at business continuity and how much harm it would cause your business or your end users if something went wrong. So if you put that lens across direct debit, like how long can you continue to operate as a business if you can't collect direct debit? And therefore, how much effort and investment should you make in continuity? So maybe that as an organization, you could last a month without direct debit and you could manage your way out of it. But for a lot of organizations, the cash flow is so tight that even a day out is going to cause them problems. So looking at the impact of what happens if something doesn't work is one thing. I think having a look at the full range of things that could potentially go wrong from my ERP or billing system's gone down. My BACS provider's gone down. There's a problem with my bank. There's a problem with the BACS and IP channel, because that could happen separate from BACS. There's a problem with BACS. All these things have to be considered. And there are ways to get around most of these things, especially for direct credit. For direct debit, it gets more difficult. But I think it's really got to just really concentrate. What's the harm that's going to happen to the end users of the things I'm doing? And also me as a business if something goes wrong, and put the proportionate protections in place.
I think you've good advice for a corporate, things they need to talk about. I'm sure they could talk to you offline about those things.
Absolutely.
You started to cover some of those other things around resilience and diverting payment channels to others. I think that we can come back to that. Right? If I can get you back on a podcast, let's get you back. I'm going to call it the case for Cara. If you don't know who Cara is Chaps as a retail alternative. It's a very 2-page paper the Bank of England issued probably nearly 8-10 years ago. So we'll probably call it a case for Cara. And we'll talk about the way that we can look at what happens when payment systems go down and what a corporate can do about rerouting.
And in that conversation, Mike, I think we should have a go at trying to sort out the thorny subject of what about direct debit? Because you can't divert those payments anywhere else.
So do I call it the case for Cara, or do I call it what we need to do something that we need to talk about Kevin? I don't know. What I need to do.
No, this is something that is, it's happening quite a lot now. There's only so much you can do.
We need to talk about Kevin, could be about checks as well. Yeah. I don't know. Let's come back anyway and think about resilience another time. Richard, we've been on this chat for a while. It's always a pleasure to talk to you.
And you, Mike.
I love hearing your views on it and exchanging chat with you. So thank you so much for your time today. And hopefully you'll be back on a Payments Unpacked podcast soon.
Thank you, Mike. It's been a joy.
See you later. Cheers.